Hey everyone, it's 12:30 and that means it's time for Livestream Tuesday. Didn't put up the thumbnail today, kind of like experiment to see like, hey, if I don't put it up, how many people will show up? How many people are used to me showing up on 12:30 on Tuesday, and maybe that was a bad idea. Who knows? Um, Either way, um, the live stream gets recorded one way or the other, and it's there for everyone to see. You don't have to show up to watch it. Someone asked me during the Bitcoin 100K live stream that it's like, hey, can I watch this at some other time? And I think many people don't know that there's actually like at least these folders, and the live streams show up in a live rather in the in just like the regular thumbnails. But either way. I just figured, well, I mean, it takes a bit of time and trouble to create all of those thumbnails. And sometimes, you know what? Like, yeah, life of a creator. I mean, on a busy day, how to like find the right picture, pose the right way, get it all out there. And so today I was like, let's see what happens. I'm gonna play some crazy Tesla full self-driving video for you. I want to talk about, I'm just going to go across a bunch of topics. I'm going to discuss Tesla. I'm going to discuss obviously Bitcoin and crypto, what's going on. I want to talk about Mankind Corp. I've been like sort of like teasing that for the last few live streams. I'm going to talk about that in some detail. And now I'm going to take some questions if people have it. All right. But let me do all the legal disclaimer stuff quickly, which is that this live stream and the content from ATG Digital is not investment or financial advice. It's presented to all of you as my opinion, our view of the world, information, engagement. You can use it as information, engagement, or entertainment. All ATG Digital content may contain errors, oversights, and mistakes. Understand that investment operations, which is a fancy word for buying or selling a stock, crypto, option, etc., have significant risks and can lead to the loss of your principal. Loss of your principal means you can lose money. I'm going to have to tell you about making money because everybody's happy. Nobody complains about that. But it's possible people may complain about that. I, the owners, employees, contractors of ATG Digital own, trade, transact in the securities that are mentioned in this video and all content from ATG Digital. We do not take money from companies or from crypto promoters to recommend their stocks or crypto tokens for better and worse, for gain and for loss. What you get from us is our own independent, unique opinion, perspective, viewpoint on the world. We are not paid to have that. We issue quite a lot of stuff. I'd say Substack is really active, and I really recommend people subscribe to that. It's free. Unlike the old business where the publisher of the company never liked us really giving away ideas or discussing stocks that were in the portfolio, because that meant that the entire promotional technique for the old newsletter business, which I don't really consider ATG Digital part of that. We're just a media business that sells subscriptions. We don't hide anything. So the Substack, I mean, especially this year, I mean, if you had invested alongside with, like when we were like, hey, Bitcoin, Doge, Mankind, Fannie Mae. Yeah, I mean, you'd have done very well without paying us a penny, truthfully. Ballman speculating has been really inactive. I've just been truthfully struggling to find the motivation to do that because there's just so much content. I mean, YouTube, our paid content, etc. But I love the idea of podcasting, and I have a thought of sort of like to take it in a certain direction. So if you like that, well, just stay subscribed. I'm going to get to it hopefully by year end. Social media, pretty active on X. Instagram, reasonably active. Facebook, pretty active. All different ways places where you can just get different types of content. I do my monthly Facebook, sort of like something like this, but for Facebook. It's a slightly different audience there. And I do it monthly, which seems about right. So I'll follow me on Facebook as well. And then, of course, if you are looking for regular updates, right, rather than weekly, paid updates, $9.99 at atgdigital.media. Now, that's the actual website. It always surprises me that at the end of, underneath the questions for many YouTube videos is, how do I subscribe to you? And I'm guessing is that one reason is that people are not watching this part of the video. So maybe I should leave this up all the time. Or else that like it's not clear because everybody's used to like the website saying .com, that they think that this is like not the website, but it's actually atgdigital.media is the actual website. All right, let me play this because I'm going to leave it in the background. I'm going to talk over it because I think this is wild and really pretty incredible, which is where Tesla is with full self-driving. And it's one of the reasons why the stock is ripping higher today and
version 13 has finally arrived, and I gotta tell you up front, it is absolutely incredible. I would even go as far to say unbelievable in many situations. And I fully came into this expecting it to be better than version 12, but what I was not expecting was for it to be this much better, especially being the very first release with a brand new native hardware for AI model. Although there still are some issues that we're going to go over, the issues are not related to driving performance at all. And in my opinion, the increase in performance we're seeing here is an even larger improvement than what we saw going from version 11 to 12 when end-to-end took over, which is really saying something. The clips you're seeing now are part of a full stress test through the Berkeley Hills that we're going to get into a bit later. And trust me, you're going to want to see it. But first, I'd like to go over some of the situations I experienced the very first night using this new update. The moment that you're about to see literally sent chills down my spine. It really is one of the most impressive moves I've ever seen pulled off by full self-driving. We're obviously making a right here, but then we have an immediate left-hand turn to make, as you can see on the map. And there's also traffic building up at the light. Even with a steady stream of cars approaching from our left-hand side and neighboring lanes, it creeps out into the open lane and then immediately turns on its turn signal and in one motion goes ahead and gets us all the way over into our left-hand turning lane like it was nothing. Now, I don't typically play many clips back in slow motion, but this one is worth it. I want you to just keep your eye on the steering wheel throughout this move. Not only was it executed smooth as butter, but the planning it did around these other vehicles that are still in motion and the way it executed was just absolutely input for input perfect. And I know there's likely going to be a bunch of people disagreeing with me on that one. This was a pretty aggressive mood, especially just being in the standard profile, but regardless, very, very impressive. There are many subtle things that add up to something huge with version 13. Like we're going to be making a right turn at this light ahead to get to the supercharger. And this is something where full self-driving would always turn on the turn signal early and confuse the drivers that are off to our right here. But now it waits until after it gets by these people and then turns on the turn signal after. And I know that doesn't seem very huge, but for the amount of complaining I've done over the years about turn signals on this channel, I had to point it out. Another thing that's been vastly improved is the parking lot performance. Interestingly, I don't think there's any release notes that specifically say anything about the parking lot, but every parking lot I've been through so far has been handled very, very well, going a really nice, reasonable speed, and really just never having moments that make me feel like I have to take over. Parking lots were the one area where I was always extremely cautious. I mean, you always have to be. There could be somebody walking out from any one of these cars, but but it never did anything that strayed away from what a good, safe driver would be doing. So I never really felt uncomfortable or the need to take over. It's also pretty cool that it's visualizing these cars in front of us on the freeway. I just noticed that, but had to also point it out. This is where things get a little bit crazy and maybe a little bit inconsistent in version 13. You'll see the car come to a complete stop here, and I fully expected it just to shift itself into park like normal. And there's even a message on the screen saying take over to proceed. But suddenly that message disappears and the car continues on forward. And I wasn't really sure what it was doing or what I was expecting it to do, but it sure wasn't this. The car then turns to the left, shifts itself into reverse, and backs into the supercharger stall. And not only does it do a fairly good job of backing into the supercharger, but it actually backs up so far that it clears the curb behind it and gets close enough to plug in the car. I don't even think Auto Park is capable of doing this right now.
All right, I am going to put that sound on mute and keep this video playing in the background, because if you've been listening to me pretty much, I guess, since Banyan Hill and at ATG Digital, one of the great, I guess, promises behind Tesla stock has been this. I mean, this is like one of the things that underpins like Tesla. I mean, people talk about EVs, but I will say like that opportunity, while it's still unfolding, it's kind of like, I mean, Tesla's the leader. I mean, people can, have different points of view, but if you're being objective, Tesla is the leader of EVs. Certainly in the United States and even in China. I mean, they lead it. And that's sort of like, at least among the people who own Teslas, if you talk about EVs, people are like, I already know that. I know that. So it's not, but like, I'll say that many Tesla owners actually, even they know about FSD. They may have there's a free version that like sort of like does lane centering and does cruise control, but they don't really know that the car can do this, right? That it can effectively be today sort of like a robo-taxi under supervision. And that triggers two different things that matter. And there's a reason why you're seeing Tesla stock go up. You're seeing big investors start to put out price targets, put out revenue targets, starting to become much more granular, factual, and say, okay, like, I think like the robo taxi business, the cyber cab business, the full self-driving business, this is going to become a reality soon. And I'll put a time frame on soon, partly based on this video. Now, there are some extraordinary segments here. And remember, this guy is not driving. Yeah, I mean, this is the computer or the robot that is driving this entire clip. And I'll put the video link in for those of you that want to watch it with the sound. This dude, by the way, is not like a paid reviewer, and he's certainly not a shill for Tesla. You can go on his channel, and he has some very harsh reviews of earlier versions of FSD, and he is pretty critical. He's pretty objective, and he has also walked up the curve, sort of like I have. Like, I have had Tesla since 2018. April 2018 was my very first Tesla. I bought it with that back then. I think it was called Auto Steer or maybe Autopilot. I can't remember. And for its time, it was pretty good. And it has gone through development process where for a while it looked like nothing really was changing. On highways, it was pretty good. The lane centering was good. The obviously cruise control was there. But there wasn't like these big jumps. But recent versions are jumping. Like, I mean, you can, like, what this person, I don't know this person's name. The channel is AI Driver. Um, like here he shows like how like the car picks up that the car that's about to pass him was swerving, and so it's just like the car gently sways out to the right, sort of like if you're a very attentive driver, you might be like, hey, kind of like maybe there's a person on the phone there, and like if they're going to pass us, you want to give them a little bit of room. Obviously you don't want to like veer into the other thing, but there is obviously like now clear signs that like FSD is starting to be better than poor drivers, better than probably many average drivers, and now increasingly showing signs of being a superior driver because it has greater capabilities. I mean, it's got, I forget, 6 cameras, 8 cameras, 9 cameras, which are processing the world the same way that a human being does, and making decisions in real time like a human being does. And that underpins what Elon has said is going to be a very, very large business. In the Walter Isaacson book, which I should have had kept with me, there is a passage where he talks about robo-taxis and autonomy being a multi-trillion-dollar business. And of course, people are skeptical. Of course, people are like questioning, these numbers. I mean, people have never thought that this project was going to get anywhere to begin with. It's such a hard problem, right? I mean, you're talking about millions, maybe billions of scenarios that a computer has to register, understand, interpret, and then make decisions in real time with lives at risk. I mean, so it's a big deal. And what it does is that it puts a real time frame on robotaxis, puts a real time frame on cybercabs. And in the Substack that I wrote yesterday, I said that, hey, given my personal experience with FSD and having pretty much been there from the beginning, like I've been using FSD for 6 years. I now have 2 Teslas. Both of them have FSD. I think this is now at the near the finishing point, not meaning that it's complete, meaning that from here you can start to take it out to the public. Now, the version that he's using is called FSD 13. And I don't have that yet. It is gone out to beta testers, early release folks. They will provide feedback to Tesla, and then probably sometime in late December, early January, this is going to go out to the public. And from what I have read, I understand that it is this version of FSD that was operating the Cybercab during the Tesla event. And so lots and lots of signs that, hey, what was seen as a essentially like, oh, Elon exaggerating, I mean, like, and a project that would never come true, that was unlikely to come true, is now essentially on the verge of like where I'll say 2025 is a realistic proposition where we're going to see, I'll say, one city get turned on with some amount of robotaxi cybercab service from Tesla. And being that the stock market is a forward-looking mechanism, and what people will start to do is like, well, okay, the math behind robotaxis, as per Elon, Kathy Wood, is that robotaxis shrink, and I'm gonna this is an ad part. I'm just gonna skip that here. shrink the cost of transportation down from $1 to about 20 cents. That's a huge difference. I mean, in terms of what that does for access to personal transportation is going to be huge. I mean, the way that it's going to work is something like the way that Uber works. We'll go into most likely the Tesla app, and in your city, if cybercab slash robo taxis are available, you will summon it or yeah, call for it, and it will show up outside your house and it will take you someplace, and they will roll it out first. I believe Elon said in Austin and in San Francisco, and then it will go on from there to other cities. And this is the big difference between Waymo, which operates in, I think, 3 places, maybe 2, mostly in San Francisco, is that because this software is not reliant on maps, instead it relies on artificial intelligence fed by inputs, which is the camera providing information. The interpretation uses data, which is stored video from people, using Teslas over the last several years. A lot of my guess is video from me is there, which then gives it information on how to react to each situations that is coming in. They can literally take this and pretty much put it into New York, I mean, pretty much any city. And to the extent they have the video library of situations that these cars are going to experience, the car is going to know what to do. In other words, no different than how we operate. The first time as a new driver, when you get to a stop sign and you get to a 4-way thing, you kind of like are nervous. You don't know, like, well, how much gap should I give to the car, etc. This car has all of that information, makes those calculations, does it. And so one of the things that people are going to do, unlike Waymo, where they depend on maps, you can't just take Waymo and put it into another city. You have to have all very, very defined map-based information to do it. Here, because it is based on an AI neural network, Tesla Cybercab robotaxis will roll out, I'm going to say starting 2025, and I'd say by 2030, they are going to be worldwide. Sounds crazy, sounds ridiculous, sounds pie in the sky. However, having seen FSD since its very early days when it was pretty crude, sort of like essentially enhanced cruise control with lane centering, to now seeing, like, I mean, look at this video here. I mean, now this person is traveling through very narrow streets in California, in Berkeley, near Berkeley. And there is a point at which you will see that this car navigates to a dead end and essentially U-turns itself, right? Yeah, I mean, these are capabilities that you would only associate with a human driver previously. But now we can watch a car. I believe this is the segment. I mean, and if you look, yeah, so he's just picking random addresses, by the way, right? And now, like, okay, so this is the address. They arrive here, and now he's putting a new address in, and the car has to navigate itself out of this, right? So this is a dead end, and it's got to do a K-turn. I mean, it's got to do like a K-turn in a narrow space, right? There are no outs, and yeah, you can see the car backing itself out and turning itself around so as to be able to now go to the new destination that has been input into the car. Yeah, I mean, this is what the premise of like a robotaxi or a car driving robot is, and we are essentially here. And the stock market is confirming that they think that this is, about to become a reality, and they're starting to bid Tesla stock higher. And that is what's called discounting, right? I mean, or looking forward or anticipating the future and starting to recognize the revenue that is obviously not here and is not going to be here in 2024. Is going to, maybe the first signs of it will be like, obviously the small amounts that will come in 2025, and people will be like, that's crazy, Paul, that's a bubble, people are unrealistic. No, that's how the market operates. And that's because big investors are forward looking, and they will be like, okay, like obviously, if they introduce in San Francisco and Austin, that's not big enough. But if you imagine a worldwide network of robo-taxis, what's the revenue associated with that? Now, that's one input. Let's just say I'm going to take a big number. Let's just say it's 20 billion, right? And maybe that's in the year 2030. Now you'll assign a probability to it. And this is where seeing videos like this and getting the feedback and looking at what people are saying, doing matters, right? Because people are like, hey, this capability is obviously incredibly advanced. And these are not map streets. This is a car just interpreting the world, the environment, making judgments, decisions, and generally doing an incredible job, equal to, in some cases, better than a human driver. And people will be like, yeah, robo-taxis gone from science fiction project to reality. And that means we're going to start to discount that into the price. And this is why Tesla stock is approaching its old high from 3 years ago. And I believe we're almost certainly, maybe by year end, certainly early next year, we're going to get to $500. And then we're going to go much, much higher. And that has to do with how big this business is. And in today's world, the average internal combustion engine car is, I think, something in the range of $50,000. You add in insurance, you add in maintenance. Yeah, I mean, a robo-taxi is going to be something that a lot of people are going to prefer over public transportation at first. I think that's like the initial market that it'll certainly go after. Many young people who don't know how to drive, once they get used to taking robo-taxis, I doubt they will ever learn how to drive. And then from there come even bigger changes. I theorized when I was at Banyan Hill, I remember writing about hey, if you look out into the future, who wants to go? I drive to Washington, D.C. sometimes to go see concerts, to go have a meal at a restaurant, to meet up with people. I can drive my Tesla right now, and it'll take 4 to 6 hours. Or I can go and take a plane, and it'll take about the same amount of time because, of course, you have to show up at the airport an hour, maybe an hour and a half in advance. And you got to obviously, get on the plane. It's a 45-minute flight. And then once you make yourself out of the terminal, and then you got to catch an Uber, catch a taxi, get out there. It's not, it's not a great time savings. But imagine you could just get into a cyber cab and travel. It's much more convenient. And also, obviously, the critical thing is expense, right? I mean, the flight to DC costs $200 to $300. A cyber cab will not cost that. So, I mean, I've always said the basis of innovation is not technology. Technology facilitates innovation, but innovation ultimately is something that increases access to something that we do every day. And personal transportation Yeah, I mean, it is at the heart of human life. So it increases access, reduces cost, and is more convenient. And robo taxis, yeah, they are going to change the world. No different than this. I mean, when Steve Jobs introduced the iPhone, who could imagine, like, like we essentially run our entire lives now through this piece of, like, yeah, technology. But it's not the technology, is what it facilitates. We use it every day. It is cheaper. It is more convenient. And this is going to do to physical life what this has done for so many other parts of our lives. And that is why you are seeing Tesla stock being bid higher. That's because bigger investors are looking forward, and they're assigning revenue, they're assigning a probability to that revenue, and a size to this market. One of the things that, like, nobody knows is that, well, how big is this market? Well, we don't know. I mean, when Steve Jobs introduced the iPhone, did they know how big this market was? I mean, the first guesses were all wrong. Like, I mean, heck, most people thought that this was going to fail, right? Because they were charging $500 and they said, oh, that's too much. Nobody will ever pay it, and all these things. Robo taxis are an even newer market. I mean, theoretically, we had like cell phones of various kinds already previously, so there was some idea, but like we've never had a robo taxi market, and I don't believe that the old like manual taxi market is like a model. Here, you've got something that can be implemented worldwide. You've got something that is a huge capital expense that the vast majority of the world, I mean, obviously in the United States, many people can afford a car, but the vast majority of the people around the world can't. All right. So you are now able to give something, an ability to people that they never could have before, or that was they something that took a lot. Like, I mean, if you're in a different place, you might have to walk to the bus or you have to get to the train station. Now you have the same convenience of anybody that ever had a car. This is going to be big, folks. I mean, people obviously discount what Elon says, but Elon dreams big, and as he says, like, we do the impossible but late. I mean, obviously, Elon talks big, throws out a big vision. It's a difficult problem, and FSD has been a difficult problem. Truthfully, at various times, watching my cars like just like incrementally move, I'm like, oh man, I don't know if this is going to happen. But watching what is going on with FSD 13, and remember, this is not the final version, right? I mean, it's going to get better from here. As it gets better, more information, they'll have more data, which will make it better, faster. We're obviously, they're investing into like even faster computers to be able to process the data faster. So we're at like a point where this is about to go up in a straight line. Like, this is like just the first bump higher. We're about to go in a straight line, and Tesla stock is going to go with it. And I can guarantee you, I will tell you in advance what people are going to say. People are like, this is a bubble. Nobody's ever built a robo-taxi network before. It shouldn't really be worth this much. Everything they said about EVs, right? They're going to say about this again. And it'll just be like sort of like history repeating itself. But just like with EVs, we're going to find out that, like, yeah, this is a new business. This is a large business. And Tesla is, at least for now, effectively will have a monopoly on this. Yes, Waymo exists, and I imagine somebody else will come. I doubt that they will be alone, but it won't matter. They will be first to market in the vast majority of cities. They're also vertically integrated. For let's say Waymo can somehow operate in multiple cities. They don't make cars. Tesla make cars. They can integrate, they obviously integrate the software into the car. So the advantages for Tesla in this enormous business, huge multi-trillion-dollar business, are just great. And the stock market is telling you, like, hey, this is real. We're taking it seriously. We're starting to price this in. And many people are going to be skeptical. Many people are going to be dismissive, no different than they were with EVs. But this is another business that is vertically integrated with Tesla's old business of EVs, where they are the leader, they are the technological leader. They're going to now be the business leader, and that's starting to get reflected in the stock. So, okay. That video is almost done. I did want to particularly show that one part of the video where he's in the city and where the car signal pulls out a little bit and then signals to the other car that it's going to have to go around a delivery truck and does it. And I was like, wow. I'm just going to let this play in the background. What did I say? What was I going to cover? Oh yeah, we'll talk about crypto. You know what? Let me see if I can find that clip. This is truthfully, I'm still blown away by this. I mean, I think I've watched parts of this so many times because it is such a huge jump, and it's still obviously not the final thing. I mean, imagine like in 6 months, 1 year, 2 years, 3 years, 5 years. I mean, yeah, it's obviously going to be far superior than human drivers, and safer. Obviously, I mean, I didn't even bring that up. Obviously, I mean, human drivers, we're distracted. We obviously have limited vision. All these different things. Okay, let me turn this off. Let me put this link in the chat for those of you who are interested in this. If you want to watch it. Okay, and let me go to Bitcoin, cryptocurrencies of various kinds. And let's talk about what is going on there. Okay. So we had Bitcoin 100K happen last Wednesday, right? Yeah, last Wednesday, I believe. And okay. Last Wednesday, and I'm just going to sort of like put up a 10, 11 day chart. So you can just kind of like see what has been going on. Let me increase the size here. All right. Okay, so here's the Bitcoin chart, and what you will see is this: we had $104,000 at the all-time high, which happened on December. Just trying to nail this number. So on December 5th. And then we had a little mini crash all the way down to about $92,000. And then we had another mini surge to about 102, a mini, tiny, not quite a crash. I'll say like just a sell off. Then another surge to 101. And then we are now right about at 94-ish thousand dollars. And what's going on? There obviously are people who want to sell off their Bitcoin. Why? Well, I mean, there are people who have costs of $100. There are people with the costs of, I don't know, a few $1,000s, and they're like, "Hey, $100,000 is a ridiculous price. I'm going to take some money off the table. I'm going to take all the money off the table." And so they are selling. Nothing particularly unusual, different going on. In every cycle, truthfully, there is this that goes on. Let me see if I can find. I think I have charts saved of some of the old cycles. I think, yeah, here we go. Yeah, I mean, this is okay. This is the current cycle. I'll just go here. I mean, so from having studied the price pattern post halving for Bitcoin, and this is the fourth halving, right? I mean, we had one in 2012, one in 2016, one in 2020, and now one in 2024. The golden period, as I refer to it, where the biggest price gains start in month 7. So you'll see that we are in 1, 2, 3, 4, 5. We're in month 8, and one of the other things that you can see from the previous halving cycles is that it's volatile. Highs are hit, and the price comes back down. Why is that? Well, human behavior. What is the human behavior? Which is that as the price some high point gets hit, it hits somebody's price target that got in much earlier, and just like, hey, I'm out. I've made as much money as I want to make, and I'm done. Actually, this is a pretty confusing chart, but and you can't really see the lines here, but this maps out the three of the 4 halving cycles. The orange is the halving date. The green is let's see if you can. There's no really way to make it clearer. The green is the beginning of the golden period, and then the red is sort of like the 11, 12-month point at which the peak comes. And you can see there's like somewhere between a 10 and 13 months max period where you get all the gains. We saw that between 2016 and 2018, and we saw that between 2020 and 2021, and now we're at the beginning of that. So if my analysis is right, and there's people who question this way of seeing Bitcoin, but I've gone back and looked. I've gotten as much data as I can from the 2012 halving, 2016 halving, 2020 halving. I feel very, very good that my view of Bitcoin is correct, which is that there is a cyclical, synchronous pattern because of the mathematical underpinnings of Bitcoin. The mathematical underpinnings are these. There are 21 million coins, finite. Every 210,000 blocks, which approximates to about 4 years, the new supply gets cut in half. That new supply creates a supply shock, if you will, that begins about 6 months after the halving date. So our halving in this cycle was on April 19th. We are now closing in on December 19th. So that will be, 6 months would be October 19th. 7 months was November 19th. December 19th will be 8 months. And you'll see if you count out the months in the previous cycles, by month 8, month 9, Bitcoin is double the previous high, which says to me somewhere between here, let's say between December 19th and probably by year end, by January 19th, Bitcoin is going to see a high price. It's not going to be there forever. Remember, it is going to be volatile, of somewhere in the range of $130,000, $140,000, $150,000. And then some sellers will come and knock it back down again. It will be up and down, but it is going to be up. And that the peak runs to about somewhere between October and December of next year. And when I first put this out, people were really kind of like gave me a lot of crap. And I said that the peak for this cycle looks like it'll be somewhere in and around $1 million. It could overshoot, it could undershoot a little bit, but that's sort of like where it is. And that's based on the previous cycles, where in every post-halving cycle, we have seen the sort of like the overcoming of one like exponent with a 1 and a 0. So in the 2012 halving cycle, we went through 100 and 1,000. In the 2016 halving cycle, we went through 1,000 and 10,000. Now in the 2020 cycle, we had the first undershoot relative to this way of thinking. We never got to 100,000. Right? I mean, so many people think that, people say like, well, that means that, that way of thinking is wrong. I don't think so. I just think that it can undershoot and it can overshoot. In 2016, it overshot. It went from, it went over 10,000 to almost 20,000. So that's an overshoot. In the 2020 cycle, it undershot, should have gone to 100,000. Instead, it made it to about 70,000, which, given, if you understand statistics, etc., that is not like that is well within the margin of error. It's not such a big deal. Obviously, in terms of human psychology, and if you were betting, and you were counting on it like getting there, and you were going to sell, you loaded up, you used leverage, and you were all in, thinking that, you would think it was the end of the world. But within the realm of math and statistics, not such a big deal. And the statistical model, I believe, of Bitcoin in the long term is going to hold. So in this halving cycle, the two numbers are 100,000, which we have just crossed, and the next number is 1 million. And then from there, once we get to 1 million, what happens is this, which is that the supply shock at some point like reaches a maximum, which is reflected by the peak price, where you've got the newest believers, newest buyers who come in with the least amount of knowledge, which come in with the highest expectations and think that there is no cycle. They don't know the halving from the calving. They might not even know how many coins are there. They just like, hey, this is going to the moon. And they bid it to a point where now there is more than enough supply that comes in. And once it starts to roll downhill, past halving cycles, we had 80% drops. And I think the smallest one has been 77%. I'm pretty sure in 2026, we'll see something like that. Not sure what it is, which points to a bottom sometime, 12 months after the peak of, I don't know, let's say it's 75%. So if we get to 1 million, that's $250,000 will be the next bottom, which, heck, $250,000 from here, and certainly from the prices at which hopefully most of you who have held will experience. $250,000. I went back and looked. The original recommendation to buy Bitcoin and Profits Unlimited Banyan Hill was around the $10,000 mark. So 250,000. Yeah, that's going to be like really, really big. Obviously people have made a lot of money. And at that point, I'm sure some of you are going to sell because like, hey, depending on, what your financial situation, maybe your age, retirement, there's probably like, some price next year, I believe, hey, you were like, hey, I want fiat, I want US dollars, my bills are denominated in dollars, my mortgage is denominated in dollars, I want out. Hey, that's perfectly reasonable. But my view is that that's what's going to happen. And then one thing we have seen really into this 100K surge and I have no way to really show this. Well, maybe I can. Let's see. These are a lot of I'm just going to use like a few charts to, these are all the, I'm just going to show you like one of the things that is clear that we're in the middle of a larger crypto bull market is that you'll see the same chart pattern pretty much for all of these decentralized finance coins, which are the most legitimate tokens because they represent businesses, they represent a capability using the blockchain that I think is going to see greater adoption. With greater adoption, you're going to see these token prices go higher. They all look the same. They all have this pattern. And if you can't see this more, but this is approximately where, like they're all above the March high or else right at the March high. And you'll see the same thing pretty much across the board. They're all showing pretty much the same pattern. And why am I bringing that up? Here's Ethereum. You'll see the March high was about 4,100. We just went past it. Why is this important? Why am I bringing this up? Because this is telling you that the greater bull market is now on. I've told you before that my view of crypto is as follows, which is that Bitcoin is the apex coin. And what happens is that as it gets to new highs, some of the money sort of like starts to trickle out from Bitcoin and starts to go into other crypto. And then the higher it goes, more and more money starts to trickle out. And we are definitively seeing that. The fact that Ethereum, got bid to, again, a 52-week high. It's not quite at an all-time high yet, but that is coming for sure because a broader crypto bull market is clearly now underway. We are just seeing the first sell-off in that, and that's driven by the same human behavior that drives sell-offs, which is what? Well, people who probably got top ticked, that in March, they're like, hey, I'm happy to get out with my skin alive and I'm out. But what we're going to see is like this supply is going to get absorbed. And then we're going to see new investors come in and start to bid prices higher. Remember, a new investor that comes in at 4,000 or 4,100, they have to have a viewpoint that the high has got to be whatever, 10% higher, 20% higher, 50% higher, 30% higher. And that's that cascade of the prospect of even higher prices that drives prices higher. I mean, people who are coming in are not looking to lose money. They're looking to make money. And not all of them are dumb. Not all of them are stupid. Many of them are sophisticated investors that are seeing the capabilities of blockchain, that they are seeing like, hey, projects like Aave, for example, I mean, they've got $30 billion in value that's locked into it. In other words, people have actually left $30 billion on a blockchain platform, kind of like leaving it at a bank. And then they are borrowing and lending. I mean, and it's all going on. As it's going on, it's generating fees. So in other words, adoption is happening. It's not purely just a price speculation. And that is going on across the board. We've got, of course, at ATG Digital, we're not like super in our platinum tier. We do some of the meme trading stuff, but the vast majority of our coins, tokens that we have in, whether it be silver tier, gold tier, diamond tier, they're based on real projects where these projects do something that the existing financial system does, but they do it through the blockchain. They do it using smart contracts, and you can benefit from it by owning the token. No different than owning a bank stock or an insurance stock, anything like that. But the key here is that these are very young projects. They're very early in their growth stages. If we get a big wave of adoption, like what we're seeing with Aave, for example, I mean, and that is one of the early ones where like borrowing and lending, because smart contracts really facilitate that in a very efficient way. We're seeing huge adoption there. we're going to see some big numbers. I mean, we're going to go past the old highs. Not every single one. It will depend, obviously, on how much adoption that happens. But definitely in terms of lending and borrowing for Aave, Compound, this is one that where, these are projects where there's actual usage, actual utility, and adoption going on. They're going to drive these things higher. Another place that I've talked about is stable coins. The stable coin market. It's going to go here. The stablecoin market, before I go into that, what's a stablecoin? Essentially, a stablecoin is a digital version of the dollar. I mean, there are versions of the euro, there are versions of the yen, but truth is the vast majority of the world runs on dollars, and they now have access to it pretty much everywhere. Last year when I was traveling in Asia, I could see even in places like Vietnam, Cambodia, people use Tether, which is the largest stable coin. You'll see that as the top line. It has $138 billion in it. Why do they use Tether? Because they don't want to leave their money in Turkish lira. I mean, sorry, in the Vietnamese currency. They don't want to leave their money in the Cambodian currency because it loses value much more rapidly than the dollar. So they want to leave their money in dollars. I saw that as well in the previous year when I was traveling in the Middle East, which is that people want access to dollars, and stable coins allow global access to dollars on the blockchain. In the United States, stable coins are available now on obviously Coinbase. PayPal has a stable coin. BlackRock has a stable coin. It is sort of like rising in use and implementation. And the reason that in the United States why people are gravitating to it is that they pay much higher interest rates than the vast majority of banks. Like you'll get between 4 and 5% for being in stable coins like USDC. And for many people, they're using it as some mix of sort of like a money market fund and or a savings account. And the other benefit, obviously, is that if you are sending money or transferring money, it's on the blockchain. It happens very fast versus old school transfers, wires, and things like that, which can take. I mean, if you're on the fastest way, it can be pretty instant, but many banks don't offer that. And instead, they will sit on your money from 1 to 3 days. And during that period of time, you don't necessarily know where your money is. With the blockchain, it's within minutes. And also the cost is nothing. So these are all the benefits. And what we are seeing is rising adoption of these stable coins. And that is one of the other big implementations of crypto in this cycle. Like, I mean, I think borrowing and lending, stable coins, these are going to drive like money into certain levels of coins. And we're going to see some big moves in some of these things, because if someone gets to 5% market share, 7% market share, I mean, the financial system is, measured in the hundreds of trillions of dollars, right? I mean, these platforms are worth $5-10 billion. But if they can see, they can capture 3 or 5% market share, they're going to 10x. They could 20x. They could 30x. So, I mean, the prospect are like incredible for some of these decentralized finance coins, which is why we're big in these things in gold tier and in diamond tier that are there. Bottom line to my crypto comments is that this crypto cycle, in my judgment, in my opinion, is going to have a different feel than the last one. The last one was very, very speculative. I mean, like if you think back to like what really got people's attention in the 2021 cycle, Shiba Inu, and on all of the meme coins. Now that's there. I mean, meme coins, I think, are essentially like lottery tickets. They're like the equivalent of penny stocks in the stock market world, where people are looking to make very quick money, knowing that there's a really good chance they might lose pretty much all of it. And it's there as like just a grand speculation. But there's also a real role here where the blockchain is being implemented as a solution for the financial system. Those projects are real. Their tokens have value. Their tokens can be modeled based on fees that these platforms generate. And I think like in this cycle, this is going to be the place where you will see like the biggest growth. And where we've got, I was like Aave, I mentioned Compound, Uniswap, Chainlink, Maker, Curve. These are all projects, tokens, platforms that have huge upside exposed to these implementations of things that, we all know and do. I mean, we all borrow money. We all have savings account. We all have money markets. So bottom line, Bitcoin, the high, which people don't seem quite as skeptical of. I see more and more people talking about $1 million as the high. So like people are more believing of that. That's one. Second, a broader crypto market, which will take Ethereum to new highs and then take decentralized finance to new highs and take other blockchains tokens to new highs, depending on obviously what implementations are still like embedded in it. Remember, Ethereum is a blockchain, and Uniswap is on it, and Maker is on it, and Chainlink is on it. So the amount of fees that that Ethereum is going to generate as all of these projects, platforms get wide implementation is just going to be big. I think I've thrown out a number here of the peak for Ethereum of like, I'll say $20,000. That might turn out to be conservative, but it depends on how far we get into the adoption cycle. We obviously own other ones like Avalanche and Doge and others, and I'm as bullish as on all of those as well, for different reasons. I mean, Avalanche has like this, this is the blockchain on which people are putting real world assets. Dogecoin has like the character of sort of like a fiat currency, which is that it's not backed by anything, unlimited amounts. Okay, I'm going on and on. I'm quickly going to talk about Mankind Corp and a particular situation that is going on. And I presented this to our purple tier members. It's a little complicated. I'm going to just quickly try and go through it. So if you go and look at Mankind Corp, I'm going to start here. One thing is you'll see that you look in this corner here, short interest, it says 15% of its shares are sold short. What does that mean? It means that 15% of the shares, which are 42 million, that's a lot of shares, 42 million. There's just a 250 million shares outstanding. So 15% is a lot of shares are sold short. Now, if you investigate this a little bit further, almost all of this short interest, and by the way, short interest means that people are betting on the stock going down, right? I mean, the idea is that you sell high and you buy the stock back low and you make the difference in profit. But it turns out that almost all of this short position is driven by a particular technique in finance, which is that when you have a convertible bond, I'm going to switch here. When you have a convertible bond, the way that the bondholder hedges the risk of owning this bond, which is what? What is the risk if you own a bond? Well, the company going bankrupt. The way that you hedge it is that you go short the stock. This is textbook finance 101. I mean, they don't have anything personal against the company. It's just the way you hedge, you remove risk. Now, most times when a company issues a convertible bond, they have no hope really of paying it back. They will just roll it over again and again. And why? Well, I mean, $200 million is a lot of money. I mean, and a small company like this, especially when they issued this back in 2021, I would say most people would have thought there's not a chance in hell that they would have the money to pay it back. But if you look at the terms of this bond, I won't go into the greatest detail on this, but the basic terms are as follows, which is that they have a coupon of 2.5%, and they mature on March 1st of 2026. All right. There are various conditions here which you can go and read, but the essence of what I want to get to is this, which is that in a wild sort of like reversal of fortune, Mankind, which was a struggling biotechnology company in 2021, which desperately needed cash, in a reversal of fortune, they are now in rude financial health. That is as a result of one of their products that is a joint venture with United Therapeutics, selling nearly $1 billion. They get somewhere in between 20 and 30% of that because of a royalty, and also because they help actually produce it. So they are now seeing royalties of about, I don't know, a couple of $100 million to $300 million flow in, and they are going to have the money to pay this off. And normally, when this bond would mature, if you read the terms, the company would simply issue stock to the existing bondholder. So if you're short, you get stock, and these things cancel each other. But if the company pays you off in cash, you essentially are naked short, if you will. In other words, you got to go into the market and you got to go buy back all the stock. The company's not going to give you any. In other words, you got to go into the market and be like, yeah, at market price. And, Mankind just has to give back the 200 million. And if you look at the terms here, you'll see that the terms are that every $1,000 would convert to 191.8281 shares. So if you translate that, and they issued a total of $230 million, it turns out to about $42 million of 42 million shares of Mankind Corp. So pretty much the entire short position is this bond being hedged. The bondholders would have counted on Mankind Corp either, rolling the bond over and obviously issuing them shares. But in all likelihood, given that Mankind Corp has the money, their R&D spending is not so great. It's they and the management has said that they are likely to pay this back and reduce the dilution from this. You could somewhere in the next, before obviously 2026, which is still some ways away, but they don't need to wait until March of 2026, because if you also read in this thing, if Mankind Corp stock trades for higher than 6.773, that's the actual number. Let's call it 678 for 20 out of 30 days. Mankind Corp can start to pay this bond off whenever they want. In other words, they can let the bondholder know, like, hey, here's your $1,000 back. And every time they do that, the bondholder has to go buy 191.8281 shares. Now, if they, let's say, did it all in one shot, they don't have the money, truthfully, to do it all in one shot. But I've been theorizing that over 2024 and 2025, First in small increments, probably 25, maybe 50 million at a time. They're going to knock this out. In other words, there's going to be like some huge surges in demand for Mankind stock driven by this. That is, again, not a guarantee, not certainly going to feel like a short squeeze, because just remember, 42 million shares, and Mankind Corp only has, they have 42 million shares short, and the total number of shares that are outstanding, which I believe includes the total shares outstanding. Oh yeah, it's about 275 million shares outstanding. It's a lot of shares that have to be gone and gotten from the market. Yeah, I mean, and what's going to happen? Like, once the market gets smart to like, oh, these folks are kind of screwed. Like, they need the stock. And Mankind is a big retail owned stock. I believe between 40 to 50% is retail. Those folks have sat through hell and back in Mankind Corp. I don't think they're going to sell. I mean, a few of them will sell for sure. In other words, you're going to have to pry these out of somebody's hands. And the only way to do that is to bid significantly higher. And remember, like, I mean, convertible bondholders, like, yeah, I mean, they potentially are looking at a big loss, and they can't really like continue to be short, because now they're essentially just betting on Mankind Corp going down when like they're in rude financial health. Their sales are growing, their earnings are growing, their cash balance is growing. Yeah, this is something that I think is going to unfold probably some part of it next year, but could go on for some period of time, because obviously everything is in favor of Mankind Corp. They got all the way until March 2026 to pay this off. They got money flowing in through the door. They have no real enormous R&D expenses. And then there's like some other things that are going on, which I won't go a lot into, but they've got a major trial coming up for one of their main drugs, which is Afrezza, which is a fast-acting inhalable insulin. And then the other thing that is going on, which is coming, like, I mean, I'll quickly, let's see, I can put up. Okay, I'll put this one up quickly. Oops. So one of the other things that is sort of in slow motion happening. My computer has gotten stuck. I don't know why. Let me see here. All right. I'll use a different one. So the US government, as part of the Inflation Reduction Act, made it law that you cannot charge folks that use Medicare and Medicaid more than $35 per vial of insulin. And if you know basic economics, which is that demand and supply works as follows. If you limit price, you will almost certainly reduce supply. That is just economics 101. And it does seem like it is now nearly 2 years into the Inflation Reduction Act's price controls, and we are seeing pretty much what you would expect, which is that the suppliers are slowly backing out of producing insulin at $35. Why? Well, I mean, they were charging several $100s, and now their profit margins have just completely shrunk. Obviously, everyone that supplies these companies, whether it be packaging or the bottles, I mean, they can't survive on $35. So there is a ripple effect that is going through. And we've seen um, let's see if I can get this up. We're seeing more and more signs of people not being able to fill their subscriptions. So what does that have to do with Mankind? Well, Mankind makes a fast-acting insulin that sort of really addresses the shortage, which is that the shortages are primarily for people that are using insulin at mealtime. And Mankind's insulin, which is called Afrezza, which is fast-acting inhalable, would be probably for some amount of these folks a substitute. So they're kind of like have the right product to address this shortage. And so in 2024 and 2025, they're likely to see higher sales and revenues for Afrezza as a result of this price control. And they will sell for $35 because their way of making insulin is much cheaper. They don't really have a problem with $35. They would gain market share, which would obviously benefit their business. Bottom line to all of it is that there's a lot of things that are going right for the company. So I had to shut down that particular tab. It was slowing everything down. And just generally, there are a lot of things going right for Mankind, the company. Potential short squeeze, a big new expansion in the label for Afrezza to kids. The study results come out somewhere before the year end, and then them being a sort of incidental beneficiary of this price control for insulin that the government has implemented, all happening in, like next year in 2025, could be very, very good for Mankind Corp. All right. Gone on for a while. Wow, an hour and 17 minutes. Okay, but I will still do questions here. Rashad, hey, how are you? Thank you for joining the live stream. You're welcome. We'll have to do, I guess, one when it hits 1 million as well, which, if I'm right, will come somewhere in October or November. Epic short squeeze incoming for Tesla. Yeah, I mean, Tesla, if you look at Tesla, they don't have a big short position, but there is a well-known short. His name is Bill Gates. And I was theorizing in X, let's see, I put this up, that if Bill Gates has to go and cover his short, he's going to have to do it kind of like all at once. Well, he doesn't have to do it all at once, but here is my X post on the short position, which is that, these are assumptions. I don't know if it's 10%, but I understand that he put on a $500 million short position on Tesla. I think it was 2 or 3 years ago. And so he's definitely, if he still owns it, he's down. And as it goes higher, him and other people certainly are going to face a problem with that. Hi, Cynthia. It's nice to see you. Thanks for attending the live stream. Alex, another regular live stream viewer. Thanks for joining in again. Mankind, I hope you found whatever I said useful. Rashad, Ken, hey. Kiela, just grateful. Thanks. Thank you for attending. Ed, thank you. Google Willow Quantum Chip News. Yeah, I have now been in Bitcoin since, I'll say as a hardcore Bitcoiner since 2018. And I can tell you that in every cycle, there is hey, these fast computers are going to break this. I'm going to say this is hardcore FUD, fear, uncertainty, doubt that you see in every bull market. I'll tell you, let it go through this year and out through that year, and don't let it affect what you're doing and thinking. MSTR status. Yeah, let's put up some charts here because Mr. Sailor has been active. Yeah. So those green dots are where Michael Saylor has been buying Bitcoin. And you can see that I think the last time we did the update, he had 350,000 coins. So we're up to 423,650 coins. He continues to buy in terms of quote unquote the valuation, if you will. Oh, that's the same one. This is where I want to go. We had that big spike on November 20th to where it was at 3.4 times the amount of Bitcoin. We're now at 2.1. And if you kind of look, this is kind of like where people tend to get back in. And so Michael Saylor continues to do what he says he said he's going to do, which is he's essentially going to sell stock, sell bonds, and buy Bitcoin. And he continues to do that. And he continues to befuddle all the financial traditionalists because, of course, under traditional financial theory, diluting your stock, selling your stock is bad. People can't quite comprehend what they're doing. But if you want to understand it, it's pretty easy. His view is that in the long term, in any time frame that he's thinking about in which his transactions are constructed, Bitcoin is up. And if that's the case, and his deals are all for 5 years, 7 years, etc. He's essentially, if I can get cash and buy Bitcoin, that is pretty much a good trade, pretty much any day, all the time, given a 5-7 year time frame. And so his way of capturing cash is to sell stock, and with the idea that whatever he's paying for Bitcoin now, if you have a long enough time frame, you're going to be up. And the other question that people say, well, why should you pay any premium to be in MicroStrategy? Well, one of the things that they have the leverage to be able to buy as much Bitcoin as possible, but I still think it's going to be cyclical. I think when Bitcoin crashes in 2026, the premium will shrink. When Bitcoin, is in its boom, next year, I'm imagining we'll get to maybe it'll be 10 times the amount of Bitcoin. Why? Well, because people will be enthusiastic. People will go crazy. We are not incredibly rational when prices are just rocketing higher. Nano Dimension, nothing much yet going on. They've been very active through this brutal bear cycle. They're going to close on Desktop Metal acquisition. They bought a number of companies. They are now the most complete in terms of technologies. In my opinion, my judgment, we're going to see a 3D printing boom with this reshoring and the tariff policy that President Trump plans to implement. We're going to see more production come back to the United States. That will certainly, significant amount of that is going to go through 3D printing, and Nano Dimension is arguably the best position for it with the number of technologies that it has under its corporate structure. Everything pretty much that I've said about MicroStrategy can be said about Marathon Digital. Marathon Digital just did a deal today. 50% of their market capitalization now is represented by Bitcoin. It's cheaper than MicroStrategy. I have to believe that next year, as people be like, hey, hey, I'm looking at MicroStrategy. It's very like common for having managed money that people think like this, like the portfolio management analyst people, which is that, if you're an analyst, your portfolio manager, you're like, hey, what else is there like MicroStrategy? And even though you guys all know MicroStrategy, we've been in it since 2020. The truth is that a lot of people in traditional finance are just coming around to kind of like MicroStrategy. I thought that was a software company. They do what? They're buying Bitcoin. They're asking the questions that we've been thinking about and answering for several years now. And one of the things they'll eventually be like, okay, well, why is it traded at a premium? They're going to go through all this. And then they're going to tell the analysts, well, is there something cheaper? And they're going to be like, yeah, there's Marathon Digital. It's kind of doing what it is. So those folks will come and bid Marathon Digital up. And that will come with rising Bitcoin prices, and also with like when MicroStrategy in rally mode, people are like, what's cheaper? What can I buy? This is a very natural way that human beings think, and they'll come to it. So like that's not yet been bid up, but it looks cheap relative to MicroStrategy, and there will be people that want to come and buy this. Hey, Liz, absolutely. I mean, if you remember how pessimistic people were when Tesla was at 100 and got low as 130. But we told you to hold, and I think your patience is going to be rewarded because I can definitely see Tesla first getting obviously to 500, and then 1,000, and then it's not going to stop from there because robo taxis are going to be big, and then it's not the only thing. Cybertruck is still, the production is ramping up. And then we've got the next part of the S curve of EV adoption. So there's a lot going on for Tesla to push it higher. And obviously Bill Gates is short. So if he has to come and cover, hopefully we'll get people to, squeeze him. What other companies? I would say the temptation to think like this is going to lead you away from the main company. And my experience in markets is that the main company will capture almost all of the value in FSD robo taxis. There are two other companies. They're in silver tier, which is Aurora Innovation and Mobileye. But I will still say, like, the search for like what else can be like, the vast majority of the value of an innovation will actually go to the company that is the leader. If you think like, in Apple, right, phones, they capture the vast majority of the value. Tesla is going to capture the vast majority of this value, and I'd keep the vast majority of the money exposed to Tesla for there. I agree. I 100% agree. Thank you, Liz. Yeah, I mean, Bitcoin, I understand, everyone is of a different age. Everyone has a different income. Everyone has a different wealth level. And obviously to pay your taxes, to pay your bills, to pay your debts, you need fiat USD. Still, I say, like, if you do have a time frame, of 5 to 7 years, it is going to add a zero somewhere, in that range. Like, we will test 1 million now, and then the final time we'll see a million is going to be in 2028, 2029. It makes you wait, but like, what else can you own that 10x's every 6, 7 years? There's not that much. So like, I'd say, selling all your Bitcoin, probably a mistake, but everyone has to decide for themselves when it gets to the peak next year, what you want to do. Thank you for attending the live stream, sir. Thank you. Is the crypto? Well, you have to have a subscription. We don't give everything away for free. We talk about everything, but you have to go to atgdigital.media, and then you can see all of the portfolio that's there. We don't give our free content out, and it's out there. But if you're on the Substack, we write about things all the time, and obviously I answer questions very openly, but we don't just put out everything that we charge other people for. Yeah, I mean, digital gold, capital. However, it can be digital gold for some, and can obviously be used as digital capital. Michael Saylor, though, has come up with a very clever way to use traditional finance markets to finance ever rising amounts of Bitcoin. And I think long term, it's obviously going to do better than Bitcoin because of the leverage, but it will be more volatile. And I guarantee you that at the lows, people will doubt and people will be afraid. And so, it will be a scarier ride than Bitcoin. And, Bitcoin has incredible volatility. MicroStrategy has about 3 times the volatility of Bitcoin. Any updates on Senseonics? They received their approval for their wireless continuous glucose monitoring. They're in the very early days of the rollout. It is going to be a multi-year rollout. When the market senses that they are seeing commercial acceptance and adoption, the same thing that I talked about, which is that the market looks forward, they'd be like, okay, this is obviously way better than Dexcom or anything out there. And now you'll start to see investors start to anticipate revenue from 1 or 2 years in front. We're just not there yet. Like one of the greatest problems with being an innovation-based investor is that really, you can be too early. And truthfully, we probably were too early. We just waited it out until we were there. But we're invested in it. I understand what the technology is. It's obviously very powerful. We obviously have a diabetes epidemic around the world. It's going to get, I believe, there's a really good chance that people are going to want a wireless continuous glucose monitoring system that communicates with your phone very easily. So it's just a matter of time and waiting, in my judgment, in my opinion. You're welcome. You're welcome. I did not see that, and I don't think that's true. Michael Saylor has been asked multiple times. He's like, is there anything else? He's like, yeah, my answer is more Bitcoin. So I do not think this is true. You can see every video. He's like, the only thing we're doing is buying more Bitcoin. So I doubt that that's true. For Tesla and Palantir, we're in them with a very large growth opportunity. Is there a point where you take a PE ratio? I mean, look, Palantir trades for, somebody asked me what, is it still good? I can't tell you this. It trades for 65 times sales, folks. 65 times sales. Yeah, 65 times is a crazy high price to pay, in stock. But the real question that people are asking me is Paul, can it go up more? Yeah, it can go up more, but it's still an expensive price. So this is where you have to do some money management for yourself, which is I tell you, one of the rules of the game is sell on the way up. Why? Well, because, that's when people are willing buyers of high price stocks, right? But everybody wants to capture the peak. And sorry, I cannot guarantee that this is the peak. It could go up to 70 times sales. It could go up to 150 times sales. And then if then you're going to come back and be like, Paul, you told us to sell and it went up another 100%. Sorry, I don't have that level of insight. Markets can price things to the moon and they can bring them right back down again, which is why in the rules of the game, which is we don't know what the limits are. On the way down, I can show you stocks that are trading, that used to trade for 40, 50 times sales, that now trade for 0.2 times sales, right? Same company. Obviously, people are looking at it very differently. The growth is gone. But they're not bankrupt or anything. It's just that the forward expectations are what drive the price, right? And it's reflected by what people pay per earnings or per dollar of sales. So, we have an AI boom with an AI hype boom going on simultaneously. Palantir is obviously a one-of-a-kind company. Should you pay 65 times sales? It really depends. We're going to stick in it. If it becomes clear, I don't know, let's say in 2025 or 2026, I don't know, we get to some point where, based on my experience, the best cues are social, where everybody is just gone completely mad and, we might sell it. and be like, hey, this is a great company. It's clearly, a one of a kind, but there does come a point at which you're like, okay, from here, maybe there are going to be far more sellers than buyers, and we opt out. But I don't know if 65 times and $71 is that point. But certainly, by growth stock norms, 65 times sales is a high price. And to answer your question, Tesla is in the beginning of a run. So, I mean, Tesla is not expensive because we don't even know how big robotaxis are. And Tesla just came off a peak, hit a low, and we're going to get to some peak that is going to be significantly higher. I would not consider Tesla and Palantir in the same category. How about 3D Systems? 3D Systems is obviously one of the leaders of 3D printing. They are going to benefit. It's clear, I think they've bottomed out. I don't think there's another low in 3D Systems. We can clearly see Proto Labs, which is in silver tier, is hitting 52-week highs. That's always a good sign. It says that, somebody is looking forward and pricing in higher sales, higher revenues, and willing to bid up for it. We're not yet seeing that with 3D Systems, but I think that'll come first or second quarter next year. You're welcome, Liz. Can you give me some insight into Coinbase? Coinbase is the world's largest publicly traded exchange. They benefit from the trading of all kinds of coins. It's going to explode. I mean, the amount of trading is going to explode higher. Coinbase is pretty near its all-time high. Its cycle is tied, obviously, to trading in crypto. All those meme coins, all those decentralized finance coins, a lot of the trading in the ETFs, even, they benefit pretty much from everything in crypto. It's going to make new highs, in my judgment, in my opinion. This is just, pretty much, it's sort of like locked in with Bitcoin and crypto, and is a huge beneficiary of everything that I laid out for crypto. I don't really know. As you might know, I mean, stock splits don't change anything. It's sort of like, as I used to say, if you take a pizza and you cut it up into more pieces, it doesn't mean there's more pizza. It's still the same pizza. So, I mean, some people like to see the number of shares go up, but remember, the price goes down by whatever the split level is. So, I mean, the splitting its stock, is, I mean, I know people love it, but it doesn't make any difference to the financials of the company. And in the short term, there's maybe a boost as people anticipate the split becomes an event that people start betting for. But in the long term, it doesn't really make any difference. And it certainly doesn't increase your wealth in any way, because like I said, the number of shares go up, but the price will go down by in whatever the split amount is. It could happen, but I think maybe at 1,000 or something like that, maybe they'll do a 10-for-1 split, but that's probably some ways away. All right, my voice is hoarse, and I have gone on for a record 1 hour and 38 minutes. Thank you all for attending. In case it's not clear where you would subscribe to ATG Digital, atgdigital.media. The silver tier goes for $9.99 per month. And that is approximately equivalent to what Profits Unlimited used to be, if those of you who are with me at Banyan Hill. All right, we got the last thank yous. Thank you all for attending. This is Paul saying thank you and goodbye.